Hello everyone, this is the pre-market report video for today 15th January 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First, just a recap on what happened on Friday. Here, the top chart is the Nifty's price movement, the bottom left belongs to Nifty IT sector and the bottom right belongs to Bank Nifty. As we see here, entire Nifty rally was continuously supported by just IT sector. In one single day, IT sector increased over 1700 points and in terms of percentage, it's 5%. It's a crazy rise, and I mean, indeed, it took support from the Thursday's earnings results, but still, it's crazy. And ADR on Friday night was even crazier, which we'll discuss in a moment. Just for info, it is the second highest single day increase after October 8th, 2020, especially almost when every company in the sector posted a contraction in their profit. Regarding reason, we did discuss in detail about the TCS and Infosys quarterly results in the last video. However, just like to discuss this info. During December and January, the main reason for the underperformance in IT sector was due to that market thought IT companies might have a sluggish demand. However, the result of TCS and Infosys did show that there was an increase in revenue but the contraction in profit. Increase in revenue means there was no deterioration in overall demand structure as market was afraid of. Of course, contraction in profit was due to increase of operational costs such as inflation, salary increase, etc. That's the reason for the crazy IT stock positiveness. However, at the same time, Bank Nifty underperformed. It increased only around 0.5% and even HDFC Bank and Axis Bank closed marginally negative. Sector-wise, as we discussed, IT increased over 5%, oil and gas and realty increased by 2%. On the other side, auto, power and healthcare closed marginally negative less than 0.5%. Regarding institution activity, by seeing this IT rally, I thought its FII were the one that buying, but that's not the case. In fact, on Friday, they were net sellers. The net sold shares worth 340 crore rupees. However, DI supported and they net bought for 2,910 crore rupees. Just for info, till Friday so far this month, FII and DI as a cumulative both were net sellers. Anyway, let's move on. Before the US market opening, US top banks JP Morgan, Bank of America and Wells Fargo released their Q4 earnings results. Here, just to clarify, whatever the earnings released by US companies this month will be a Q4 one. Whatever the earnings released by Indian companies in India will be just a Q3 since both the countries using the different fiscal year start and end month. Back to the topic. Year on year wise, JP Morgan's posted a best ever profit in their entire 150 years of history. However, on quarterly basis, their profit fell by 15%. Similarly, Wells Fargo stock also fell by 3% as their net interest income comes 7% below than their earlier guidance. Whereas in case of Bank of America, it missed both revenue and as well as profit by massively. So overall, none of the US banks posted a result in favor of the US market. Hence, all the banking stocks puts pressure on the US market. However, on the positive side, monthly basis, US wholesale inflation data PPI dropped 0.1% against expectation of increase of 0.1%. Obviously, this is positive since we know the present month wholesale inflation data will have a direct influence on the future consumer inflation, which in turn increases the chance to near 80% that Fed will cut the interest rate by 25 basis points in the March month. In addition, this PPI data dropped the 10-year bond yield again to below 4%. Overall, banks dragged the market down, whereas PPI data, Fed monitoring tool and 10-year bond yield supported the market. In the end, Dow Jones alone decreased 0.31%, whereas S&P 500 and Nasdaq increased marginally less than 0.1%. In case of VIX, it moved from below 12.5 to above 12.5. Regarding oil, again there was an escalation in Red Sea, so the oil ships were diverted, which in turn increases the oil price by around 1%. At Saturday morning, WTI crude closed near $73 per barrel, whereas Brent crude was around $79 per barrel. Regarding Indian ADR, first on Thursday, Infosys ADR increased near 4%. Then on the following morning in Indian market, it increased 8%. So in line with that, it added another 4% on top of that on Friday ADR in US. Hence, calculating arbitrage showing only flat to positive 1%. However, on the Wipro side, it increased 17%. So today, if an Indian market, even the increase of 10% will lift the IT index and possibly add further positiveness in other IT stocks as well. About GIFT Nifty, on Saturday morning it closed at 22,044, equating the 60 points premium to the spot market. It's kind of indicating 50 to 70 points gap up opening. So that's all about the Friday's global market. Now let's move to the India specific info. On Friday and Saturday, various companies such as Wipro, HCL Tech, Just Dial, Anandrati and Den Networks all released their earnings. So those companies, we can expect the market to react for that. Here in this video, let's discuss in detail about Wipro and HCL Tech. If required, please pause and have a look. In the last all three sequential quarters, Wipro's earnings, or we can say net profit, continuously decreased by 3 to 7% each quarter. Then on the positive side, the December quarter is the first quarter. They increased around 2% sequentially. I mean, on year-on-year basis, it did dropped massively in profit by 12% and revenue by around 4%. But this sequential positive made the Wipro ADR stock to increase up to 18%. Then about HCL, they posted better results than Wipro. Sequentially, their revenue increased around 7% and profit up by 13.5%, and both revenue and profit did beat the analyst estimation. However, we can't say HCL will rally like Wipro, since Wipro's 2022 peak was around 700 rupees per share, whereas today trades around 460 rupees per share. So Wipro is on discount, whereas today HCL is already trading near its all-time high value. Either way, we can expect both the stock to trade positive. Moving on, second, regarding India's consumer inflation for December month, it did increase marginally to 5.7% from 5.55% in November month. However, it was less than the analyst expectation. Third, another rating agency, S&P, downgrades Vedanta to selective default risk, so better be cautious on that stock. Fourth, Society of Indian Automobile Manufacturers released the statement that the overall auto export in whole 2023 dropped 21% compared to the whole year 2022. I mean, their main drops come from the 2 and 3 wheeler segment, which alone dropped 20%. So we can expect auto sector will be on focus today for this. I expect it to impact negatively. Hope I am wrong. Finally, Motilal Oswal released the Q3 preview for all Indian private banks, ICICI Bank, HDFC Bank and Kotak Bank and Federal Bank, all expect to increase around or over 20% net profit, which looks good to me. Let's see. As a summary, US market closed flat to positive, except Wipro, other Indian areas indicating flat to positive, and GIFT Nifty also indicating the gap up opening of 50 to 70 points. Moving on, based on stocks open interest, there is a short build up on Metropolis, HDFC Life Insurance, HDFC AMC, IEX, Petronet and Container Corporation of India. On the contrary, long build up in Chambal Fertilizers, ONGC, Coforge, Tata Consumer Product, HCL, Infosys, TCS and Birlasoft. About the things to look out, Geo Financials, Angel One, Fedbank Financial, Reliance Industrial Infra and Brightcom Group are some of the major companies' earnings results are still released today. In terms of macro, during the market hours at 12 p.m, India's WPA data is scheduled to release, and at 2:30 p.m, Germany's WPA data and annual GDP growth is due. Then in the aftermarket hours, Europe's industrial production data are some of the items we need to keep an eye out today. Couple of more things. Tonight, US market will be on holiday, and on Friday, India's industrial growth data was released and it was not good. Indian industries grown only by 2.4%. The main contraction comes on durable and non-durable goods. Contracted 5.4% and 3.6%. So those stocks will be on focus. Coming to technical, on Friday, Nifty hit a fresh all-time high of 21,928 and closed positive of near 250 points. Thus, on daily chart, it forms the gap up green candle with a short upper and lower shadow. On the weekly chart, continued its higher high formation for the 7th consecutive week. And more importantly, on Friday, there was a strong positive crossover in RSI and it had a decisive breakout from 21,800. Hence, all indicating a potential continuation of the upward trend. Nifty exhibited a significant strength, securing a notable breakout on the daily chart as it surpassed the key resistance level of 21,800. So, the potential short-term target is 22,000 and the resistance is at 22,200 with a crucial support at 21,600 to 21,500 zone. In case of Bank Nifty, it also closed positive but underperformed compared to Nifty. Still, on the daily chart, it formed a bullish candlestick pattern with a higher high and higher low formation for the second consecutive day, which might indicate the potential trend reversal, however, required confirmation. Still, on an immediate basis, we can expect the positive momentum to continue till 48,000. And now, a decisive breach above 48,000 is crucial for the uptrend, and also that will trigger a substantial short covering. On the downside, the strong support is at 47,000. On the options front, the maximum call option open interest was at 22,500 strike, followed by 22,300 and 21,900, with new call option writing at 22,600 strike and then 22,500. Thus, the options data suggested that 21,900 is the crucial area for further march towards 22,000 to 22,500 level. Whereas the maximum put option open interest was at 21,700 strike, followed by 21,800, with new put option writing at similar strikes in the same sequence. Hence, the 21,700 to 21,800 zone is expected to be the support zone. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make an investment based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.